Wonderful. Well, we'll go ahead and get things started. Good morning and welcome. I am Alex Preston with Epic River. I'm an account executive. I'll be hosting and guiding some questions as we dive into the webinar today. So thank you for spending some time with Epic River and Mountain View Advisors this morning to discuss how credit unions and community banks can navigate PPP. Most of this information will be geared towards credit unions, but is really relevant for every lender involved in the PPP process. Specifically, the credit union community has dispersed over 9.6 billion in loans to businesses through PPP. Around 934 credit unions participated, issuing 190K loans, supporting about 1.2 million jobs in the process. The volume and adaptations our lenders have had to make to support these communities is incredibly impactful and important. The immense amount of volume for the credit unions comes with great risk and opportunity, however. So to help illustrate and explain the credit union's perspective, we are fortunate to have Scott Moriarty on the call, strategic consultant for Mountain View Advisors. Scott, would you like to say hello and give some background on Mountain View Advisors?
Certainly. Thank you, Alex. And good morning to everyone, or good afternoon for those that are on the East Coast with me. I have been in the credit union industry for the better part of 25 years in multiple capacities, both as a lending executive and or a service provider. And I certainly recently have established this consultancy to help credit unions and community banks try to solve their technology optimization issues, process issues, and compliance integration issues. Know the inner workings of how credit unions try to get things done. And I think it's important to understand as we look at this program, it's a very fluid program. This is most, if not all of probably the credit unions participating were not SBA lenders to begin with, even if they were doing commercial lending. So having an understanding of what these nuances are and trying to find ways to consistently automate and track and control those things are really where we bring some perspective, because we've been doing it in the credit union space in a variety of functions in a lot of ways. So with me and my team, our ability to help both Epic River and either the organizations we work with understand that helps them get things implemented more quickly and allows them to have controls in place.
Thank you, Scott. We're really lucky to have the partnership with Mountain View Advisors, especially in the development of this module, to have that perspective from a credit union. We also have on the line someone I work very closely with, Norm Woolworth. He's our Director of Client Success. Norm will be providing some comprehensive insight into the functionality and the purpose of Epic River's PPP module. Norm, would you like to say hello and give some insight into Epic River?
Yeah, hi everybody. Thanks for joining. Thanks, Alex. Yeah, at Epic River, we've been electronically signing and closing loan documents for about 15 years through our ProSign Online product. It's offered through the Finastra Laser Pro suite. I would hope and assume at least some of you on here use that product. So we're very used to working in this sort of atmosphere. For the PPP forgiveness specifically, which I'll show a little bit today, we went a little above and beyond just our normal ProSign product and created an entire borrower-facing module to make the process easier for the borrowers, and with a lot of built-in logic to help them guide them through the process, what documents they need to support. So we're really proud of what we've produced and think that we can really help both you as a lender and your borrowers.
Thanks, Norm. So we're currently in a wait-and-see holding pattern when it comes to PPP submission, with many members biting at the bit to finish the PPP process. So to kind of kick things off, what is the new timeline for the SBA submission approval process?
Well, certainly we know that a lot of this is fluid, like you mentioned, and Congress is working on a variety of things as we speak. But August 10th became the date where the PPP forgiveness submission process can begin. There are certainly requirements that when an application is submitted, the 60-day requirement to submit and clear to the SBA is where the lenders will be held. However, there are certainly some extensions on how the coverage is being calculated and how the calculations are being factored in. But really, in many ways, getting these loans in through the process in some way, shape, or form prior to year end for tax implications is going to be critical. And as many of these businesses work with their CPA firms who are trying to advise them, they're getting mixed messages. One is saying, hey, listen, let's see if it works out. Others are saying, hey, we definitely need to get this going so we can get this off and consider for your taxes. So being prepared as a lender and giving these borrowers every opportunity to succeed if they are going to move ahead is really going to be critical on so many fronts. So even if the timelines change, which we're dealing with the federal government, so the likelihood is they're likely to change, being prepared and being as prepared as soon as possible will only enhance both the borrower's experience and the member's experience, as well as the lender's ability to keep up and track what they're doing so they can actually make sure they have the quality when and if auditors come in down the road.
Yeah, thanks, Scott. And just to add on that, I think that's one big advantage that we have with how we've developed this module is that, with all the fluidity that is happening right now and all the ambiguity, unsureness, is that the way that we have developed this is something that will allow us to make quick updates with guidelines that are changing. It allows you to instill a process up front that will work for you going forward, no matter how many rounds of this we have to go through, no matter what changes that come out. We built this very fluid product that will change with the times.
And I think as you factor that in for any of the lenders that are on the call here today, the ability to keep up with that as an individual organization becomes increasingly difficult, especially when most of you, if not all of you, are in some sort of remote strategy. So making sure that there's consistency amongst the staff members that might be collecting this is going to be a critical gap to manage. So having a centralized area where you can keep up with these rules and dynamic rule changes and implement them quickly can really be a helpful tool for the lenders who have to manage the process.
So Scott, you touched on this a little bit earlier, but with most credit unions not being SBA lenders before, why do credit unions need to be extra diligent with these applications?
So there's a lot of rules and regulations regarding the SBA back-end process. I mean, we know that the onus is going to land on the borrower to make sure that their paperwork is in play. But as a lender, and especially as a credit union, being a member-friendly organization, you're interfacing with businesses, mostly mom and pop businesses that you probably haven't worked with before if you've been a commercial lender, because the average loan size is under $100,000, right at $100,000. That shows you that these are types of businesses that you haven't worked with before. Simultaneously, you are required to put a package together to submit to the SBA that they clear and write off on before you actually get your lender fee. And for most of you, considering the average loan size, that's a 5% fee. That's $15,000 a loan if you process it correctly. But the SBA doesn't just do it blindly. You need to make sure that you have your paperwork requirements in place, and the ability for them to come back and audit that paperwork for up to 7 years is something that you also need to be prepared for. So having a clean and consistent process to make sure that your borrowers and members get what they need, because many of them don't have accounting departments, many of them don't have legal departments, many of them are just trying to figure it out on Quicken books. If you have some dynamic logic in there, you're going to guide them more effectively, and the ability for you to, if you're working with law firms to help review the experts, if the law firms are going to be the experts, the ability to integrate your law firms into this workflow so that they can see their documents electronically, see what you've presented electronically before you submit to the SBA. Those are going to be really, really critical controls that then allow you to submit with confidence and know that if and when the loan is forgiven and you receive that money back to pay off the loan, that you're prepared down the road. Or if it's not forgiven, that you're ready to service the loan. And that's another piece that you'll have to think about down the road as well. So it's critical to make sure that you understand it's not just blind forgiveness. And yes, the onus lands on the business, but the lender is going to be accountable to make sure that the documentation requirements and the archive requirements are met. So you want to be prepared.
Yeah, thanks, Scott. And I think on that, Just to build off that, I think Scott's completely right that, we're dealing with a lot of borrowers who aren't used to doing this kind of thing. This is going to be very new for them. And that's the thought process we had behind the development of this module. Is we like to think of it as a TurboTax style approach. I'll show you a few windows here later in this webinar, but it really can handhold and guide the borrower through. And really, the point is to reduce the amount of times that they'll be calling you, to ask for advice and ask for guidance on how to, fill something out. We know that you don't really want to be in that position as providing guidance, and so giving them a user-friendly module that assists them through the process and make sure they're uploading the proper documents, I think is really important through this whole process.
And I'm going to dovetail back, Norman, on this. That piece of it's really critical, but your staff members can feel more confident that the packages that they're getting have logic behind them and that have controls put in place so that they don't have to be individual experts on every one of these requirements. They become experts over time because this is all new, but are they filling out the easy form? Are they filling out the standard form? Is there calculation for 24 months of coverage versus 8 months of coverage? Like all of this logic that becomes dynamically fluid, if your staff members, especially if they're remote, aren't aware of them, then there could be gaps. And you don't also want inconsistent information going out to your borrowers that may be variable, which is exacerbated further by the fact that it's more difficult to keep track of that consistency with our staff as we're remote. So really trying to find a centralized rule engine, both for the borrowers to make it better and for your staff members to make sure that they're putting together a digital package that's trackable, I think will really help smooth the process and really help you be more efficient getting these applications into the SBA.
Some downstream thinking there for sure. And that kind of leads into this next piece with the unknowns that are still at play. What are the risks associated with kind of taking a wait and see approach and waiting for Congress to make a decision? Waiting till next month until things are firmed up.
So I think like anything with a wait and see approach, you're putting at risk the factor that it's going to be a ebb and flow. And if you're waiting and then all of a sudden you get, many of you did 1,000 or 2,000 loans, many of you did 500, many of you did 200 loans. You get 100 applications or 150 applications within a week's period, your capacity to handle that, if you're waiting to implement technology, becomes an issue. As credit unions, especially now, we all know that the resources are very difficult, right? To get new technology in place, to get even contracts signed and do all those processes. What we helped Epic River understand is being prepared, having that due diligence package ready, getting that process ready for you to go through what is already probably a fairly lengthy period in your due diligence, and having an easy to implement process that doesn't require internal resources should allay your concern of why would I wait? Because even the cost associated with implementing the platform is less than, if you took an average loan size, it's more or less than one loan failure if you wind up getting an SBA reject, right? So the point of waiting, to me, seems not to be derogatory, but it maybe a tad short-sighted, because what you're setting up here is really a centralized process and system that allows you to track new members. These are members you may not have dealt with before systemically. Even if they do wind up forgiving at a higher level, you're still going to have to submit your application process to the SBA for you to get your lending dollars back. Yes, you may not need the paperwork requirements, but the more of these borrowers you have in a centralized location, the more future cross-sell, the more future loans that you want to be able to build. So to me, it's in its best interest both to set up an automated system that has legs beyond even the PPP forgiveness that could be used for the second round of the lending tools, and as Epic River continues to stay fluid with the situation, but archiving, keeping track of those borrowers that you may not have worked with before. And if you are putting a package together, having those files archived and easy to recall. When an auditor comes in down the road, you show them a complete systemic process, they're going to feel a lot better about what they're seeing versus if you're pulling out, the paper files that you may have had with the application process. So the rules are going to continue to change. The sooner you're able to implement and know that the tool will update as those rules change means you're prepared. And I think I also want to add this, because the anxiety of what the accountants are telling these small business borrowers is, should I or shouldn't I? Should I apply and get forgiven, or shouldn't I apply to get forgiven? Many of them need to get this forgiven, because if there is a second round, they're going to need this out of the way. So the sooner you're prepared, the sooner that you have these tools available, the sooner many of these smaller businesses can get that out of the way and maybe get prepared for the second round. Even if they eventually get forgiven, they'll know that they've moved ahead proactively.
Yeah, that's a great, Scott. And I just want to double down on that also to think of it from the borrower's point of view as well. I know, many borrowers out there are, have their fingers crossed and are hoping for the auto forgiveness, which, may or may not go through eventually. But from what we've been hearing from a lot of borrowers is that there is an urgency and a anxiousness to get this over with and get these loans off their books. As Scott just mentioned, if there is a second round that comes through, but also, they don't want the government telling them what to do. They want to start making changes, within their business, and they don't want to be following the government's guidelines anymore. So I think that there are a subset of borrowers out there who, might just want to move forward and fill out the application, fill out the 3508, whether or not auto forgiveness does go through, and just get it over with and then take the time to do that. And I think being prepared to service those borrowers is very important.
One final dovetail on that too, though we know the average loan amount is, just north of 100,000. Many of you, and that credit unions probably were on the smaller side of that spectrum more often than not, you will have loans that will not be forgiven. You will have loans that you want to make sure you process. And those are the loans that if you wind up missing, up to $350,000 is the threshold for that 5% fee. It tiers down below that. But if you have loans above $250,000, you really want to make sure you have a systemic process in place to make sure you manage those, because failure on one of those could really put, your portfolio, if you will, for this program at risk from a revenue side and from a risk side. So it gives you both things. It's not just about the small loans. It's also, you will have loans that you're going to have to service, and you want to make sure that application process is put in place.
I think that really encapsulates the nature of the beast we're dealing with here. There's kind of another piece that we're dealing with, and that's the fact that we're all still working remotely. You have a nice office there, but we're all still in our homes. So especially for credit unions and banks, what are some of the hurdles of remote business that come into play with this process?
Well, the irony is they went through the first phase. Of any of you that have been lenders, I think we were all expecting 6 to 8 weeks, maybe 2 months of isolation. And for the organizations we're working with now, we're going on month 5, month 6 of being out of the office. And I, just being a consultant and running projects for many credit unions, am seeing a much more consistent degradation of consistency with the staff staying engaged, right? Staying trained, having consistent information, making sure the communication pathways are consistent. And when and if we get back in the office to ultimately find ways to, bridge those gaps is still unknown for many areas of the country. Some areas may be in, some areas may, here on the East Coast, I'm from Jersey. We haven't been inside of an office in 6 months, and nobody's looking to even go in offices, right? But that's an area. So why is that important? And I think many of you that have been in your credit unions for years, training is always a very difficult process. It's difficult when you're in the office, right? This is a fluid program, and having experts internally is difficult, again, especially considering many of you were not SBA lenders, or if you were SBA lenders from a previous role and you came into the credit union, your staff members are not SBA experts. They're not used to complying and putting up with these things. So what the platform ultimately can do is make the training consistent and easy to understand, help them understand more about the process of the technology from the borrower standpoint and how they interact with the packages that are all digital and easier to track, and then ultimately move through the workflow. You're going to have a better experience both for the borrowers and from your staff members who have an easier way to pick up and learn that. If we're, like you said, if you've got people calling in and you have remote and you're not tracking each of these calls, even if you are recording them, how do you assure that there's not misinformation coming out from an employee who has no intention of misleading? This is such a fluid process. By having a systematized, it can say, look, this is what the system is, this is what we're asking for, this is what's required based on these calculations, here's what we need to have, here's what I'm missing, not here's what I need. It's going to tell you what's missing. I still need this form and I still need this form. And that's going to make things a lot easier for your staff members to be consistent with your borrowers.
So oh, go ahead, Norm.
Yeah, I was just thinking, I think that's a great point, Scott. I think it would be, if you don't mind me sharing my screen here for a second, Alex, just kind of give a little window into what this can look like from your side as the lender and how the platform can really support, a remote process and standardized workflow. So if you see over here on the screen, this is the kind of dashboard that you would be able to see with all your different applications. And there's a lot of different stuff that you'd be able to do within these. So if I click on one, in terms of if your lenders are working remotely right now, we have a little discussion section where if you're, you're communicating with other lenders about the status of a specific application, you can message back and forth within the application, and it's time stamped and name stamped. Up here, you can see what documents have been requested of the borrower themselves, and you can request additional documents, automatically, which will send an email notification to the borrower. You have statuses so that you can see what status the specific application is in. So really having the way that our module and our platform supports and promotes having a standardized workflow, having an easy way to communicate between everyone electronically, I think is really important, and the module enables that for you.
And if I may, again, this is me putting on my whole. I've been on a lot of different corners of the credit union space, but I've always been a lender in many ways, and imagining having a dashboard that allows you to know what's going on with your pipeline and knowing where loans are so that you can proactively keep track of that versus being on a spreadsheet, versus maybe not having somebody update that spreadsheet. So keeping within the system, having your employees work within the system gives you richer data and assures you're managing any of the possible timeline shortfalls. So, I've been a mortgage guy for years. We have rate locks, right? And if you're at a 45-day rate lock and the loan is still not clear to close in day 40, as a lender, I know that. Well, here you're at day 45 of the application process and you still haven't sent it to your attorneys for attorney review before you submit to the SBA, you're putting that loan at risk for forgiveness. Having that systematized and having dashboards to access that can really allow you to manage the operation more effectively.
Well, thanks, Scott. So we've touched on it, but maybe a condensed version of really what are those pain points of the application process?
I think, and Norman, I think showing them a little bit about what's required based on the calculations. We started with 8-week coverage. Now we're at 24-week coverage. How does that factor into what the business has to factor into what they are forgiving and what they're not forgiving? By having that calculus in there based on the question. I mean, if you've seen what the SBA has released, it's a digital form, right? They have lots of instructions, right? And there's even some that have automated the digital form. But if you don't have a dynamic programming in it, if A is answered, then I need B and C, then there's a possibility of it not knowing that. Having an understanding of what that business's requirements were for payroll versus for their expenses versus is a different calculation depending on the size of the loan and depending on the type of the business, right? You have self-employed borrowers. Are those self-employed borrowers tracking their income in the same way that employees are tracking it? These are all things that require calculation. And the borrowers don't often know. And they're reading and they're interpreting, and everybody's trying to interpret it a different way. By systematizing it, you're going to get consistent. Here's what the calculation is. Here's the requirement. Here's what I need. If you're trying to do that variably, you could have a lot of gaps in what you're getting at. And I think, Norman, because to me, what excited me about working with Epic River is we've been out there looking for dynamic workflows and trying to really get consistent. And there are others out there trying to do pieces of this, but we haven't seen one that takes it from the applicant's standpoint and works it all the way through lawyer review, SBA submission. That's a big piece of this. So you're going to be able to submit through this portal and make sure that whatever documents that you have are archived for the time period you need to for any future audits, both from the SBA and or from the NCUA or FDIC, because this is a balance sheet event. Even if it's forgiven, you need to make sure that you've managed that risk. So I think it would be helpful for them to understand that the logic is built into the pathway so that the borrowers have a better chance of getting your employees what they need.
Yep, and let me go ahead and share my screen again here. I showed you what you would see as a lender before, but this is what the borrower-facing piece would look like. As you can see, it's much more user-friendly than just putting a PDF document in front of a borrower and expecting them to be able to decipher it. The built-in logic that we've been referencing so far, as you can see, if I change my payroll schedule to weekly, I'm then prompted if I want to use an alternate covered period. would be an example. If we're not going to ask that if they put in a monthly period. If they took an EIDL advance, we're going to have additional fields pop up, but we're not going to distract anybody with those fields unnecessarily unless they need them. Another great example is down here. This is a questionnaire to see if the borrower is eligible to fill out the 3508 easy form, or if they're going to have to fill out the full. As you can see, if we answer yes to that first one, the other questions go away, because that means that the borrower automatically qualifies for the easy form. So again, getting these questions answered for the borrower automatically has a lot of advantages, as opposed to having them call you to ask these questions. And the amount of logic that we have built in really makes that easier. One additional piece I want to show really quick is that we also automatically ask for supporting documentation. So if we're over here on our non-payroll question screen, if we filled out an amount for mortgage interest payments, this is going to automatically prompt the system to ask the borrower to upload a mortgage statement as supporting documentation. But if they do not put a number in that field, and they put in a number for a rent or lease, we're not going to ask for that mortgage document, for that mortgage statement as supporting documentation. So again, having all of this logic built into the system makes it a more user-friendly experience for the borrower themselves, and then also limits the work and the amount of the amount of review that you need to do on your side. Because you can be confident that they are uploading the proper documentation and getting the proper numbers into the proper fields.
And adding, and I know it's making sure that you check with your compliance areas to make sure we understand. We know this, right? Most people are very comfortable with the internet, but there's going to be some of these borrowers that are not comfortable with the internet. They are going to talk to your staff members, and they're going to call those staff members. Well, if they work through this application process with the borrower and have them attest to what's being put in there, they're going to ask the right questions as well, and they're not going to have to figure out all of that variability. So it could be leveraged both from your employees base and from the borrower's base. I mean, clearly the borrower owns the application, so it's clear that you make sure that you cover how you want your employee to use that, but it's still a tool that can then be submitted back to that business to make sure that they attest to it, right? They're on the hook. You don't want to misguide them. Using this tool, or the borrower using the tool, could really help to make sure that they're successful. And that's really what you want. You want these businesses to be successful in getting their forgiveness.
Great explanation, guys. With Epic River, we've been a software company for 15 years, and the user experience is very important. And we've learned a lot of lessons over those 15 years to increase that experience, and hopefully that'll help create less weight on the shoulders of the lenders down the road. So kind of the next piece here, and we get this quite a bit, is really, what does the implementation requirements look like for the Epic River module?
I'm going to hand to Norman, but I'm going to add some context, I think, on the back end that I think would be concern points for credit unions that may be addressed here.
Yeah, so I think, I know depending on your size, as a credit union or as a lender, you might not have a huge IT team. You might not have the capacity to, be installing applications locally in all your different workstations. We're a completely cloud-based solution. There's really, implementation is pretty much flipping a switch and providing you a URL. It's very, very limited. A quick hour-long training to get your staff up to speed. But there's really no lift whatsoever on your side in terms of doing any sort of IT related work or project management that's required. It's a very simple process. And that is the reason that we have designed this all cloud-based to make it as easy as possible for you, because I do know that is a big concern for a lot of the lenders.
And I think just restating, and then also coming up with the other piece, which I alluded to in the beginning of the process, due diligence, right? Due diligence is a requirement, and sometimes the bane of many of our credit unions that want to try to get things done quickly, but we have to do it. And it's a process. We've got to make sure we cover our bases. We worked with Epic River to have them, what we believe is more or less a standard comprehensive due diligence package related to their security as an software service provider, related to all of their, this is member information. They're prepared to get that to you. And if there are any gaps, then they should be able to bridge them quickly so that you can try to get, if this is something that, timing is, this loan didn't exist 5 months ago. Now we're dealing with, everything's fluid here, right? So trying to get a solution in play becomes difficult. They're prepared to give you a very comprehensive due diligence package that we, work with them to try to make sure they have everything they need that we anticipate credit unions will need. And it's web-based, so it's brandable, right? It's light brandable, but it's brandable, so it's linkable and it's integrated into your website. You really need your digital team or whomever is working on your website to help you embed that. And then maybe some marketing message, right? And so your marketing team certainly may want to put out something on the website to say, hey, we put a digital solution together. These are not big, heavy lifts, but they can provide impacts that can be helpful. So you can get implemented quickly and you can get trained quickly. But, there's not many solutions out there that we've seen so far that are end to end. So there's going to be a line here soon. And that's what we want to make sure we try to get everybody as up to date as quickly as possible. So how can we get you implemented quickly? That's what we're helping Epic River work through as well. How can we make sure you get implemented? And how can we make sure that your processes and controls are in place through the system so that you're ready for future audits and ready for whatever you need down the road?
That really sums up what the implementation looks like for us and the windows that they have. So kind of looking down the road, what opportunities are presented and how does a credit union maximize those opportunities or a bank maximize those opportunities?
Banks and credit unions are about relationships for the most part. Community banks for sure, and credit unions especially. We call members, right? These are members, and it's not something we take lightly as being a credit union person. But we know community banks and their relationships are very important as well. We said it earlier. You have not worked with businesses like this in the past, more than likely, right? This is a new space for you that now gives you an opportunity to truly serve your communities. The irony is, which is really, really great, is the majority, I think nearly 75 to 80% of all of the loans were given by institutions with less than $1 billion in assets. What does that tell you? This is a community outreach. Where you are is who you're serving. Simultaneously, if you receive these now in a database, you have actionable data to work with to continue to serve them in the future, to market to them other products and services. Are they doing deposit services with you? Are they doing, business lending services with you? We all know the Shangri-La of how do we get them into consumer products, right? And how we make transitions to car loans, home loans, and all those other things. By having a centralized database of a new segment of your business that allows you to serve your community, you can also then create some really good community. How many restaurant businesses did you have come in, right? You can start doing analytics. How many manufacturing businesses did you have come in? How many, like you said, retail businesses did you have come in? Where are you seeing the demand? Now you can start putting some marketing strategies together. You can start putting some cross-sell strategies together to truly serve them and to serve your area. So if we saw retail was a big piece where you are, how can the credit union or bank help retail, with all of this process and market it? So that to me becomes essential. And if you have that decentralized and you don't have that in a format that you can track it and you don't have the data to report off of, you're putting yourself at a disadvantage to leverage these relationships in the future.
And there's a point to that where if the below 150 is forgiven, you have an ability to capture this data and like Scott said, really be able to leverage your community and identify other needs that they may have. So moving forward, what should the PPP task forces be doing with the unknowns that are still at play?
I think obviously keeping your ear to the ground and having an individual within your organization that is staying apprised, right? You have to trust but verify the system. You have to make sure that you're understanding the rule changes and you're communicating to your teams. And I'm sure many of the chief executives in the lending area, the business executives are doing that just by nature. You have a new loan type on your balance sheet, right? It's imperative that you are prepared to manage deleveraging the accounts for forgiveness and making sure that you have your allowance for loan loss for those loans that don't get forgiven up and running to make sure many of these businesses are or don't succeed. The other thing that you want to think about as well is you want to make sure, because many of these businesses, unfortunately and tragically, may not be here down the road because we see an entire change and shift in how our economy is starting to evolve. By getting these loans forgiven as quickly as possible, first and foremost, you give those businesses a better chance of moving ahead without being encumbered by that debt. And you also make sure that you're not exposed, even though it's, the SBA is guaranteeing it, you're not exposed just in case you didn't file the right paperwork or you didn't have the right things. You're putting yourself a chance if you don't have that process in place. If and when you have these members apply and they are in there and then they're subsequently forgiven, you still have to submit to the SBA, right? Well, why not have a systemic process of taking at least even the forgiven loans and making that interface with the SBA work effectively as well, so that you can get the funds transferred back and you can get your fee in accordance to what you need. So preparing for post PPP and getting prepared for who and when certain auditors and or SBA lenders may be coming in is really that last piece. Where are your documents? Where is your compliance to the easy form, the non-easy form? Have you handled all of the variability? Well, if that's all systematized and then those packages are tied in to a system and they're archivable for the 7 years, and whether it's archiving it either with Epic River or you want to download it into your core system, these are simple transfers. You have a complete package that's easy to demonstrate and show to these auditors that you had a systemic process with controls put in place to assure success both on the lender side and the borrower side. So I think those are what the task force really need to be focused on. It's not only the applications that are going to come in, it's what you're going to do with all of the paperwork that you ostensibly, that you have to make sure you're keeping track of, and what's your process in play for that too.
Yep, and just to add on to that, I think in danger of sounding like a broken record, but this module was built with fluidity in mind. It was built specifically to handle changes down the line. So we store each individual piece of data discreetly. So if a calculation needs to change, if an additional document is required, if any change to guidelines, we're able to make that update and move fluidly with the situation instead of putting that onus on you as a lender. And I think that's really important.
So last couple of questions, but what would you say to a credit union that's concerned about the cost of the module or implementing a solution like this?
And again, our partnership and working with Epic River it's been fluid as well. This is easy to implement at a low cost implementation cost. Frankly, I think they set it up to really try to get borrowers in play. I think they have a unique product set, so I think they see the potential. Why I bring that up is the cost associated. If you did 200, 300, 400 loans, many of you did, most of you did that. There are a few of you that did over 1,000, and there's some people in between that. And your average loan size is about $100 and some odd $1,000. Yours might be different. If you fail to deliver the right package to the SBA and compromise your fee, the lender fee, then that's going to overweigh the entire cost of implementing the system. So one loan failure really makes the difference between should I have implemented, should I have not, right? All of the other reasons, to me, it just makes sense as well, because you're systemizing some. I've talked to a lot of credit unions. It was a difficult process taking the loans in. There was a lot of manual processes. There was a lot of gaps. You can remediate a lot of that through the forgiveness process, right? You can remediate a lot of that by taking the forgiveness applications and tying them back to the applications you took for the actual loan, tying in the loan date, right? The forgiveness cycle begins when you disperse the funds, not when the application was submitted, right? So those are all things that leveraging the system relative to the cost and time should outweigh, like you said, that financial cost, because you're going to be mitigating some risk and preventing losses on the backside.
Yeah, and one additional piece I'd like to add to that is I think this whole process is more than just about the revenue from these loans. This is about building customer trust, building customer satisfaction. As Scott was mentioning earlier, you likely have some new lenders, some new borrowers that you brought in during this process that you never worked with before. Some of them might be existing relationships. This is an opportunity to really blow them away with what you've provided for them, and really get that relationship off on a really strong foot. This has been a painful process for you all as lenders, but also for the borrowers. And being able to provide an easy to use system, making it both easy for them and easy for you, the benefits of that are much past just the revenue from a specific loan.
And I'd like to add too that we've created flexibility in our agreements to be able to meet the needs of even a small amount of applications. So getting the ball rolling and testing your systems and testing the plan that you have in place, we want to enable that for you. We do build that into our relationship. Guys, we've covered a kind of a wide range here. Is there anything else that you'd like you want to explain to our attendees in regards to this process?
I think, and Lindsay, you probably will queue us up. I think there's one or two questions in the chat engine related to some logistics, but I think from my standpoint, having been working with credit unions, been in credit unions, serving credit unions and smaller banks for better part of 2 decades, process consistency, controls, and training are always a challenge. Systems that are implemented are usually underutilized, and having dynamic logic built in to drive it are really tools that are of a premium now. We're all moving into digital strategy. We're all trying to provide digital solutions as a industry. These are opportunities to do that in a space you've never been in before. And really, probably the more important thing is, and we've said it multiple times, but being prepared for future waves by having some sort of platform in place and possibly being involved in a new business sector in the SBA really can be opportunities that allow the technology to advance with you over time. So being prepared, automating, controls, these are all consistent things you've heard before. If it's easier to do and it's not cost prohibitive, it's something that you probably want to consider. Even if you've had, maybe a couple dozen or 2 dozen loans, like we said, if there's a clawback of the 5% admin fee that you receive for doing loans under $350,000, is that worth putting it at a risk? And those are the types of things you want to make sure. That's where the income comes, right? That's why you did these loans in addition to serving your members and your borrowers. So preparation's key.
Yeah, and I think the last thing that I would like to end with is just kind of, we've mentioned it throughout, but just a reminder that this really is a complete end-to-end solution. We're not just creating the document for you and handing it and say, here you go. This is a borrower facing module that makes it easy for the borrower to use. It's a management system for your workflows as a lender to review and request additional documentations. And then we actually submit to the SBA for you. And then we'll also return the response from the SBA about, what their judgment was on the loan. It's archive abilities to store the documents for as long as they need to be stored for in case the SBA comes back asking questions. It's really end to end. And it's, I think that's the big point that I want to leave everybody with.
So one of the questions that was brought up was, Scott, what lender fee were you referring to?
The admin fee associated with giving, again, the interest in the SBA loans is they're provided the interface to get that, and the way the SBA compensates the lender is that admin fee. I think $350,000 and below was 5%, and I believe above that goes down to 3%, depending on your loan sizes. So they have an ability to claw that back at any time, at a later time, if there's the paperwork that's received isn't clean and clear. So you want to make sure that you've got that covered, because that's the income revenue opportunity that you ultimately wound up entering this sector for.
Absolutely. Well, guys, any other questions that we have from our attendees? We had one other one that was at the beginning that may have been answered through text, but I think is worth bringing up. So if auto forgiveness does happen, what does that mean to the documents that we have to collect? What does that look like?
I think, again, fluid. The reality is, even if there is auto forgiveness, you still have to submit to the SBA, right? So you're still leveraging the system, like Norman just said, to submit a loan that fell within that category is going to help you get the SBA to get you the funds back to pay the loan off, right? They will obviously have to request less, but as that comes out and those rules are dictated, the system will update, right? And the system will accommodate that. So it probably still makes sense, even if they are forgiven, you still have to, as a lender, process whatever the SBA requires for you to get your funding back. And that's where the dynamic development cycles that the Epic River team is doing can accommodate fairly quickly. So either way, you want to probably track what members you forgave. Wouldn't it be better to do that systemically?
Excellent. Well, we've taken about 45 minutes and really appreciate everybody hanging in here for the length of the webinar. We will actually be sending out a link to this recording of the webinar, as well as some additional information to be able to get in touch with Mountain View Advisors as well as Epic River. We can definitely set up a demo if your team would be more interested in seeing how this module would interact with their credit union or community bank. And if you have any questions at all, feel free to shoot over some your questions either through email or give us a call. We really appreciate your time today. Guys, anything else to add?
Thank you for taking the time, and best of luck, whatever your solution choice is. It's going to get hairy, so like it did the first time. So hopefully you're prepared either way.
Yeah, hang in there, guys.
Yeah, thanks everybody. Appreciate it.